What's up? You ready? You ready? You ready? Oh my goodness, so let's just start with the big elephant in the room, shall we? Let's just start with that. Let's just get it out of the way. Well, that. Let's just get it out of the way, shall we? Let's get the big elephant out of the room. The disaster that is Snap. Never have I been more wrong. Oh my goodness. Never have I been more wrong about a stock than Snap. So I come out and say that I think that they're going to beat their estimates, that they're going to do better than anticipated, that this is going to be a good thing. Wow, was I wrong. Snap kicked me in the nuts. Now, if Snap kicked you in the nuts, don't worry, I believe there is a blessing in disguise. 287,000 shares have traded. Are you kidding me? At an average of $18. I want to get into the bottom. Get to the bottom of why Snap decided to post. Are you ready for this? A 2.2 billion with a B. $1 billion loss. Snap, the social media giant. You know what? Let's do a Snap while we're doing this. Let's do a Snap live. Just to show you guys how simple Snap is. How basic it is. How anybody can do it. But Snap, they did not do a good job here, Snap. You know what? Let's do a Snap here right now, okay? Hi guys, we are live on Rich TV Live, talking on YouTube about Snap Inc. and their disastrous first quarter. There we go. Hi guys, we are live on Rich TV. We're just gonna post that on Snap Live so anybody that's watching can see it, because we are going live with this information. There we go. There we go. Perfect. So I just sent that Snap. So that's what Snap is. It's about these little videos and these little pictures that you just take and you send to your community, and you build your community and you grow a community. Very similar to Facebook. But what happened here, as I dissect this and I look at Snap Inc. and I look at the two CEOs, let's look at these guys. These guys are laughing, right? They're laughing all the way to the bank. Let's find out why, shall we?
Have you ever?
Do you want to find out why?
Are you listening?
Damn.
You want to find out why? Alright.
Yeah.
This is why, people. You ready?
Yeah.
You ready? My goodness.
Yeah.
Why Snap lost 2.2 billion with a B in its first quarter as a public company. Let's look at this really carefully but quickly. These guys right here. Snap Inc. Chief Executive Evan Spiegel Wright received a special award at IPO time that factored into a big loss for his company in its first earnings report. Snap Inc. stock plummeted in late trading Wednesday after Snapchat parent's first earnings report as a public company revealed a gigantic quarterly loss of $2.2 billion. The figure is 4 times more than revenue Snap had brought in before the recent quarter, when it reported 149.7 million in revenue. So Snap's revenue actually grew by 400%. That is a really good thing. But I'm wearing red today because Snap, you kicked me in the nuts. The CEO decided to get 1 billion shares of debt. Why would you take it all in debt? Why wouldn't you get convertible preferred shares? Why wouldn't you take it as equity? Why would you have so much debt on your first quarterly report? What are you thinking? The 7-year-old company has generated 500 million over 7 years. So this is a really good thing as far as revenue is concerned, but they're losing money at a rate that nobody's losing money at, because they're comparing them to Uber, because Uber's lost a lot of money. Now, so how did Snap manage to lose that much money in just 3 months? Well, the bulk of this has to do with the initial public offering that Snap enjoyed in March. Because the company went public in the quarter, it realized a gargantuan amount of stock-based compensation to employees whose option vested at IPO time, which accumulated to nearly 2 billion of the total. So out of the 2.2 billion of losses, 2 billion of it was in stock. However, as former Twitter Inc. employee Jim Presser pointed out, the total was far greater than the stock-based compensation claimed in the IPO first quarter for Facebook, who claimed 1.3 billion in stock-based compensation. So these guys almost doubled that. And Twitter claimed 521 million in stock-based compensation. The difference with Snap was a special stock award given to the company's chief executive co-founder, Evan Spiegel. Snap gave Spiegel a CEO award. Are you ready for this? A CEO award. Oh my goodness. Are you ready for this? Let me give you guys a little bit of noise here for that CEO award. What's going on here? What's going on here? What's going on here with the CEO award? What's going on here with the CEO award? We need to give some recognition where recognition's due, because that's what it's all about. It's all about giving recognition. Without recognition, why would we work so hard, right? Why would we do it? Let's give some recognition. The fans go wild! And the drum roll. Snap gave Spiegel a CEO award in its IPO, which Chief Financial Officer Drew Vollero said in Wednesday's conference call was fully realized in Snap's first quarterly earnings, even though it will be paid out quarterly over 3 years. Oh my goodness. Spiegel's CEO award equaled 3% of all Snap shares after the IPO, according to the March filing with the Securities and Exchange Commission. That ended up being 37.45 million shares that Snap valued at the time at nearly, you ready for this? $1 billion in stock, $974 million to be exact. Those shares will be worth much less when trading begins today, as Snap shares dove in after-hours trading to lower prices than they have ever traded on the open market. Snap closed yesterday, at the end of close at $22.98, 35% higher than the IPO price of $17, and it is currently trading right now at, are you ready? $18.02. How disgusting. You should be ashamed of yourself, Spiegel. Now, you're either a genius trying to get rid of all the stock now so that you can start showing growth like Facebook and start growing every single quarter like Facebook, and hopefully that's what you do. And I'll buy more and we can grow together and you guys can be a huge success. And we would love to tell your story here on Rich TV Live. Or you were very, very greedy and you're going to destroy this company with dilution. So I hope it's the first one, Spiegel. I'm going to give you the benefit of the doubt here. I'm going to hope a smart young guy like you isn't trying to kick the shareholders in the nuts continuously. Because right now, that's what it looks like. This looks like you made me look real bad and I was real wrong and I'm admitting it. I got egg all over my face. You kicked me in the nuts, Snap. Come on, man. Why would you kick me in the nuts? Why would you do this? Make sure you like and subscribe. Visit Rich TV Live. Don't forget to subscribe. Click the like down below and comment on the show because all I do is bring you winners other than Snap because they kick me in the nuts. Peace.